Hello, this is Dave, and welcome to Equity Story. I'm here with the Wolf, and this is Trade Watch, Equity Story Trade Watch, and general share advice and not personal advice. As always, please read the disclaimer. Very, very, very important. You understand it's general. All right, Wolfie, what are we doing today?
Well, today we're waiting for the news on RBA and its rate decisions, but I think it's going to be fairly obvious what they're going to do, and that is leave them on hold. I think it's a consensus leaving them on hold. We've seen the numbers, economic numbers suggesting with the inflation going down, leave them on hold. So anything not leaving on hold would be a huge, huge shock.
Wolf, and apparently I wasn't on board with this, but it hasn't stopped the banks putting up their interest rates anyway.
Yeah, but
over the last 2 weeks, I mean,
they ever have to follow what the RBA does.
Yeah, I know this is. I mean, so also the RBA must be looking at this, thinking. I think some of the banks put their rates up 2 weeks ago. So the banks is that mainly because the cost of money around the world is just getting a little bit more expensive?
Yeah, absolutely. I mean, they just want to maintain their margins, really. So if their margins look under pressure, they're going to raise, rates out of cycle, so to speak. And that's what they do. I mean, I've seen it before. I've seen the previous cycle as well. There's a period where the banks just moved higher anyway. Doesn't matter what the RBA does. People got pissed off, but
so I mean, I think the banks are sort of doing the RBA's dirty work anyway. That's the point I'm getting. All right. It's a fine balance, isn't it, to obviously slow the economy down without destroying it.
Absolutely. And I think there's a revisions again. I was reading stuff about revisions that potentially it's going to be a weaker economy that we've seen, which I think puts even more pressure not to raise rates any further, right? I think seeing the numbers coming through economically speaking, you've got to leave them now and just let the economy maybe hit a soft landing before it bounces maybe down the track sometime.
All right, we hope, Wolf. We hope. Let's have a look at some stories. So there's been some big movers today. We got PRS. Prospect.
Yeah.
It's up 48%. You wanted to talk about this one?
I do, because whenever I see a move of 40, 50, 60%, whatever, there's probably traders in there, right? So I wanted to speak about it because I'm sure even some of our members are going, oh, it's going up, I'm going to go have a play with it, right? So for me, it's almost like we have to talk about it to inform what we think about it. And unfortunately, while they're talking about spectacular in Finland, there's two things here. First of all, the historical. So they're just announcing, oh, we found something in the archives, guys. Looking great. And they put it out as news. I think, come on. The other thing is, of course, what are they? Are they spectacular? 4.7%, yeah, 3.8%, and it gets lower from progressive further there. So, there's a couple of pretty good ones. Very thin, though. Very, very thin. And they're not super. Well, I suppose when you look at it, are they deep? Yeah, okay. Between 0 and 200 meters. So look, at the end of the day, historical, a lot of I think FOMO in there. So I certainly wouldn't be touching this.
Okay, so just too dangerous. So if you seen that stock jump 40%, just be warned. Really tight stop if you're going to trade it.
Absolutely.
Now we've got SXG, Southern Gold, and if you don't mind, Wolfie, I'll bring the results over so you can talk through it.
Yeah. Why is it jumping 80% pretty much, right?
So you can see here you've got they've drilled 404 meters at 5.1 GT gold, traversing 13 high grade veins. Just have a look at here, 5.6 at 7.8. That looks pretty nice. 6.9 meters at 205 GT. So they've got some little nuggets in there, haven't they?
Certainly do. So let me just explain exactly what this means, right? So they intersected 404 meters from 374. So pretty much that hole has gone down to about 700 odd meters, right? And they're saying that in that 400 meters, they've intersected 13 individual little veins. And you're talking quartz veins that carry gold in it, right? So that's what it means. Now, those 13 veins, obviously stacked probably, right? One after the other, pretty thin. They're not super thick. So 5.6 meters at 17, 5.4 at 39. Some nice grades for sure. So, when you look at that, the stacked veins, lenses, it looks pretty interesting for sure, right? Is it mineable? I don't know yet. I mean, I think probably they've got to do way more work than we've seen. But at least it just demonstrates that a lot of veins out there just carry a lot of gold, right? So if they can get onto it somehow, make it all gel together, stick together, they've got something. That's why I suppose the market are getting excited about. So is it a bit more exciting than what I saw with that REE? Absolutely it is, right? And X6G has been coming out with some pretty interesting results anyway over the last few periods. So one to trade for sure. Is it going to fluctuate? Is it going to be volatile? Absolutely 100%. Just from the basic look through, what he's telling me, there's going to be some probably more excitement coming through with some more drilling. But there's a lot of work still to go. So it's high risk, but interesting anyway.
So, Wolf, when you look at it, so just I suppose this is the surface, right, up here, right? And then you got what, Rising Sun, you've got Apollo, you've got Golden Dyke, and Christina. They've noticed four potential areas of veins, correct?
So they've been drilling those areas, right? So they've see that drill hole that they've put out, that SDD-SCO77B. That's the one that they highlighted in gray on the bottom right hand corner, right?
Yeah.
And that leads to that intersection that's in yellow, right? So as you can see, that intersection in yellow that's going all the way down to 700 odd meters, you've got that little red bits on that line showing you the little veins that they've intersected. So there's, they've obviously still need to do a lot more drilling to interpret how they look like, those veins, whether they are, getting thicker, getting thinner, whatever, right? So there's a lot of it, but you can see in that under the rising sun, there's obviously a lot of veins in there, right?
Okay, and obviously this Apollo looks interesting because it's pretty shallow, correct?
Yeah, that's right.
So how deep does this say it is here?
Well, I think they've drilled to 700 meters, right? So you've got that up. The drill hole ends about 780, I think, whatever.
So the issue is, right, and I just want to tell mums and dads, when you start getting deep, it becomes this would not be an open cut mine this deep, correct?
No, it certainly wouldn't. Absolutely. I mean, especially with the veins are so thin. So the deeper you go, the more costly it gets, right? Because you got all that sort of stuff.
So where Apollo could be open plan,
and I think Apollo's already been mined in a way, I think. Previously, right? So they are going more, but this intersection here just gives them more food for. So I mean, that's it. Apollo stuff that could potentially be a continuation of what they just drilled under the gold, from the previous one. So yeah, that gap in there, that wide gap between the two, right? There could be something in there. They just got to drill more holes.
Right. Okay. But Wolf, what you're saying is that obviously when you look at a line like this, the sort of capex to get the mine up and running would be sort of pretty decent, correct?
Oh yeah, look, a lot of work to be done. Yeah, possibly, quite substantial capex because they're going to have to do a decline and go down all the way to the veins. I mean, those veins could start at surface. We don't know yet. I mean, this is a whole thing. They've drilled a hole down to 700 meters. They need to just keep exploring to see where those veins go, right? Whether they go to surface, whether they just go 700 kilometers underground vertically. I mean, we don't know, or horizontally, right?
And I think it's interesting. They're saying here those little pink ones, right? What they're saying is visible gold logs. So they're obviously waiting for those
presumably, yes.
Yeah. So potentially, could be another good result coming out because they're saying there's visible gold, which is interesting.
Correct. I mean, and that's why it's going up, right? So there's more excitement to come. If they can keep going in that rate, like I said, I think the most important thing now is whether it all can be put together to form some sort of a mining plan into this, because like I said, mining very thin veins of gold, 500 meters, a kilometer underground is not easy. So you need a lot of gold to justify it.
So what's your when you look at this, you've got a good gut feeling. You've been looking at these all your life. Would you say this just needs more? Yeah.
Yeah, absolutely. I think for me to possibly look at this underground, between 500 and 1,000 meters, so another kilometer, I think you got to start at least a million ounces, at least, right, to be any sort of thing. I mean, if it's surface, you can get up with a small resource because you don't have to do much. You just scrape, and process it, and here you go. Going up kilometer, you need a lot of gold. So I think you got to at least come up with 1 million ounces plus for you to actually even think about looking at a mine.
All right, interesting. Thank you very much, Wolf. And it's always good to just get get educated on these mines, because I know that's a real expertise of yours.
But just to confirm, again, there's a lot of FOMO in there. It's going to be volatile. So if you are in this for some reason, play it on the day, even on the 60-minute, whatever, Dave. I think that's probably the key here.
Right. Yeah, just that dangerous. Yeah.
Absolutely.
Yeah, and even that's hard on the 60 minutes. So you're not helping me, Wolf. I'm going.
Minute chart. There you go.
Minute chart. I mean, really, I think in all
you get under 72, I think you're out.
Yeah, definitely. I think maybe we'll just leave that one alone. We'll leave that to the FOMO traders. Now, listen.
We'll have a look at it later on the track when they come up with more drilling results, for sure.
Yeah, I think there'll be a better time in the cycle to get into that. Wolfie,
yes.
So ORA actually had a nice little move. Typical bloody exhaustion pattern. Look, it's funny. A stock like this, it goes up, retests at $4. A stock like you think would have a little bit more volume to be so heavily traded.
Yeah, but what happened, I reckon, Dave? I reckon somebody got note they're going to be a capital raising coming up with a big acquisition. That's why he sold it down for $4. Oh my God, shit, sell. It's going to be an announcement coming soon.
and I'm sure they're the people supporting the raise, are they?
Absolutely, the funds, right? Yeah. They would have got a whole wind of it. I think AFR was the one that broke the news, right? Saying Aurora's looking at something, but there would have been an insider's knowledge. Absolutely, somebody would have just let the cat out of the bag, unfortunately. And they're raising a huge amount of cash. They're basically buying a company that's almost at $2 billion. Their own market cap's 2.7, so they're buying a $2 billion company. So they're going to double in size effectively. They're raising, I think, $1.3 billion, right? At $2.70, mind you. So that's a 20% discount. This is going to be a sideways movement for some time, I'd gather. And
who's doing this raise for them?
Good questions, because there's a capital raise and a debt funding as well. So I'm not sure who does it, but they're also talking about it's going to be like a mid single digits accretive acquisition. So it's not going to be like a bolter for them, but it's going to be good. I think they've been looking at this for some time.
Right.
So look at that. All they do is bottles for their top end alcoholic companies out there, right?
Right. Okay.
Look, obviously it's within the strategy, but for me, I'm always nervous with a big acquisition like this.
Yeah. Okay. I'm surprised. That's a lot of money to raise. I'm surprised. There's still enough cash around to sort of throw money into something like this. It's
Yeah, I'm sure you'll be well supported. But like I said, I mean, effectively doubling the business. What a boost to them. But they have to obviously execute. And look, I'm betting they're going to execute because the management is excellent. They've been wringing that little, rag so well out of ORA when the growth is like 5% and people are still loving him. So well done to ORA.
Okay.
He's the last little ounce of goodness out of it.
All right. Okay. Very, 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 very good. So,
but no trading for the moment, I gather.
Yeah, and the raise at 270. So again, back down here. I wonder how they picked that. Maybe could have. Yeah. You know what? It's a big discount, but I suppose if you're going to raise that much money, it's going to be for a big discount, isn't it?
I think anyone's going to give you money like that. You probably want some. I suppose risk. Oh yeah, 270 sounds okay. I mean, it's a steep discount for a big company, but you are raising half your market cap.
All right. Okay. Let's have a look at 5 stories that we didn't talk about yesterday. That what we're saying. Get this.
So this is newish stories, right? Let me just set the scene here. There's newish stories. We don't really look at it that much, but they've delivered still good results in FY24, so last month, and we're going to start probably following them a bit more closer because they've also said in FY24. So I looked at them and saying, okay, are they saying positive things for FY24? And they are. So I'm happy to look at them. So we're going to add them to our little watch list, and maybe we'll get into it a bit more detail with time. But I'm just going to introduce you to some of these stories. Let's go.
Okay, let's start with Monash IV because Wolf, really the chart's been pretty excellent for this year. It's actually great looking chart. It's had a few buy signals that we put on Einstein's, and obviously doing IVF for getting mums pregnant. They can't get pregnant, so it seems to be a growing problem every year. Like people are having children later and later, and IVF is becoming more and more important, Wolf.
Yeah, and obviously the fertility rates are dropping, right? So that makes sense. Plus, I had read through it this morning about the presentation from the report, and they're saying there's a cost of living crisis, but it's not affecting them, which is interesting, right? So there seems to be.
Well, I think
than food.
Well, you know what? I think if a girl hasn't had a baby and she really wants one, right? Yep. I think it's sort of.
They'll find a way, right? They'll find a way to pay for it.
It's a bit like having an operation. You just got to find the money, haven't you? You've got to, it's not something that you can put on the back burner and say, okay, it's not like the Equity Story membership. We'll do that in 6 months. If you want a baby, you just got to have one.
Mm-hmm. Agree. So, it seems pretty good, like almost resilient in a way. I thought it was cyclical, right? And I'm sort of sticking to that still. It is cyclical, but maybe it's not as cyclical as it used to be.
Well, it's every 9 months, Wolf, in case you didn't know.
Yeah, thanks. Not in that sense.
Okay. So I just thought I'd help you.
I'm talking about economy. Look, I think the reason I had to look at it because, of course, I went through your Einsteins and I'm looking at charts that are going up, and then I'm going to marry them up with fundamentals. So I've found 5 stocks out of your Einsteins that have got something there that reported well. They're coming up with positive FY24 language. Put it on your watch list. I think it's good. And it's trading on, I'm just looking at it. So I've also looked at the numbers. It's trading on 22 times FY23. So if they can grow another 10 to 20% like they did in FY23, you're looking at double digits, but in probably now 16, 17 times, which is decent. I think it's decent.
Not bad little div. Steal my ideas of Einstein's.
Yeah. Well, you've got no idea what they do, so I'm just going to really claim them as my own.
Steal them. Okay. I know about this one because you keep going about ReadyTech. You quite like it. And Claude, so tell us about ReadyTech.
Yeah, look, the thing is with ReadyTech, we sort of looked at it back in when, the techs were super, super duper, right? And we traded it and we were quite happy. Then we forgot about it because the techs were kaput, right? Only just recently when suppose they come up with the announcement, remember they had a takeover offer at $4, right? Back in November, December 2022, as you can see on the chart. So they are now coming back to those levels. But I think they're a much better company than it was 12 months ago. Because they are, they've got over 100 million in revenues. They are profitable. Look, they're still risky for me when I look at it. And they're trading on about 86 times. The reason why they are trading at 86 times because the EPS went halved from last year, right? So if they can get back to that performance what they had the year before and the year before that, they can easily gone from that 80 times PE ratios down to maybe 40, even lower, right? So I'm not too worried about the 80 because I can see that there's definitely merit where they can jump very, very quickly. So what are they talking about in FY 2024? They're talking that they're going to 50% organic growth, which is okay. I'm happy with that. And if they can have a handle on their bottom line as well, I think this is a decent business. It's one of the few techs that's actually profitable. and it's growing. So we definitely have to put it on our watch list. And, you know, Dave, it's something that chart's looking good. It's coming back to that $4. And if they can break through that $4, I think we've got very green skies ahead. It's good to go for a run.
From a charting point of view, Wolf, I've got a P very high here. That must be incorrect, is it, after that last announcement?
No, it's like I said, it's 80 times, right, at the moment. And that is not incorrect. That is correct. It's 80 times right now. But like I said, it can easily halve from here because it was double that. The EPS was double the previous year, right? So they halved it. They just need to go and work on the bottom line a bit more, and they will probably look much, much better in FY24.
I mean, how many times do you see stories like this just keep on rolling?
Yeah, exactly.
Do you remember with Medicus when they were doing something similar, and we were going, oh, it's expensive, and as long as they keep growing like they're growing, this share price can keep on moving.
Yeah, and this is why I said, you know, it's something that we should be looking at because it is a profitable tech. There's no money around like that.
So, okay, it's a bit of resistance there, but a sort of buy near the trend lines, I should think, definitely.
Mm-hmm.
All right, let's have a look at SMR, because I'm very surprised you've gone for a coal stock, being so conservative as you are, but far away.
It's a sleeper. Okay, so this is my little thesis for SMR. And remember, when I ever talk about mining companies, one of the key criteria for me is it going to have production growth, right? And this is the key here. They will in FY24. So even if their coal price remains same, right, for the next 12 months, you're just going to grow by sheer numbers. That's what's going to happen. You know, greater production equals greater revenues, probably greater profits, right? So if you even take that, and remember, these guys don't have thermal. This is all about coke and coal. And if you look at iron ore, and this is where we're going to probably look at iron ore and coal, where, you know, they obviously go hand in hand for steel production. It is pretty positive still. I mean, I can't, you know, even though I'm thinking why, I can't argue against what I'm seeing on the chart. I can't argue against numbers, Dave. That's my problem, right? I can argue against the thesis, but I can't against the hard, cold numbers. So this is a good business. If you take the view, right, that coal prices will stay same, if you take the view that they're going to grow the production, they're going to have a decent year of costs control, could be higher. And the reason why I say that, Dave, they're only trading on 8 times on the current numbers, 8 times. So it's pretty cheap.
Okay, I'm just having a look. So they're not solely obviously supplying China. They're supplying India, North America, Russia, rest of the world.
There'll always be someone that will require coke and coal. This is quality coke and coal, by the way, as well. Australia has got really, 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 you know, up there coal when it comes to quality.
Okay, very, very, very interesting. All right,
they've only got 5%, I think, of thermal, so it's predominantly coking / PCI.
Right, very, very interesting. Wolf, and currently trading
8 times.
Right. Okay, it's very cheap, isn't it? Okay, interesting one, Wolf.
Yeah, I mean, what's the actual? Have you got the dividend on this as well?
No, I've got no dividend for these guys at the moment, Wolf. They did pay a they
paid a dividend. So we can
they did back it. They did 2 years ago. They paid about sort of a little dividend.
I think they paid one this year. Let me just double check that. Hang on. We'll have a look and we'll work it out, because of course, you know, if you got a dividend, it's even a bigger bonus to have a look at this story as a, you know, again, I'm liking it because you've put it on your charts as in Einstein. So I'm thinking, okay, there's some merit here. I got to have a look at this, and it's making a lot of sense. So let's have a look. Have they put out that they're going to pay a dividend? Let's have a look at here, operating performance. Okay.
I haven't got anything up on mine, but
earnings, income. Okay, maybe I think they've. Okay, look, I'm going to have a look at it. Let's just move on, because I've got a couple of more stories to talk about, but it's definitely, if there's a dividend, it's a bonus, right? That's how you got to treat it. Don't treat it as a dividend play. You're taking this as a production growth story. Next one.
NHF.
Mm-hmm.
Again, it's been a pretty beautiful action the last 2 or 3 years, Wolf, generally. And it looks good. Looked really good on Einstein the other day. I think it's still a buy for a little trade back up to 9. So far away.
Yeah. I love the fact that they're very positive for FY 2024. And they say pretty much all the business units is firing, especially the travel, because they've got travel insurance, right? That's part of their profile, as part of the business. So it looks pretty good right now. If they can maintain that trajectory, they're trading on 19 times at the moment. So it's not expensive. If they can maintain that, I think this is a buy from here, Dave.
Well, okay. And lastly but not least, of those 5 that you want to have a look at is Hub.
Yep.
Which they had a really good leap of faith.
Yes.
And I think you just got to be patient, let this come back a little bit.
Yep.
And as soon as it does, Wolf, obviously we'll get it on Einstein's or on Wolf's Weekly Wrap. It'll be there.
Yep.
Far away.
The one I wouldn't chase right now, but I probably want to have a look at it, right, when it comes back to the trend lines. This has got a investment platform. This is what it is. It's the inflows coming through, all the legacy type stuff, from the banks, from the other big legacy players in the space. They are moving to these Netwealths, premiums, and hubs of the world. And it's been like that for the last few years, right? And it's still looking at pretty good, strong growth. This is going to probably keep going for a little while yet. And when you see the growth that they come up with this year, very, very good. They're talking about positive FY24 as well, so further growth. Trading on 68 times, that's going to drop down significantly again next year. So look, I think overall, probably the premium player in this space right now, Hub, right? So you want to be on this horse if you like this space.
All right, brilliant. On that,
extra 5 stocks right there for us to play with, get more, more involved in. So we'll follow them this year for sure.
All right, absolutely love it, Wolf. Listen, thank you very much, Wolf. So, really interesting. 5 stocks to get on the watch list, and just some, I think, some good advice on some stories that put out some deals today. Otherwise, fairly quiet, Wolfie. Fairly quiet.
It is. It's good. We just need a bit of quietness after that's August of our reporting season. But then again, 1 month of maybe quietness, and then we've got reporting season again in the quarterlies for October.
Yeah. So looking at the Dow, not too bad. Let's have a look at our market. Yeah, XJO.
Not bad.
Yeah, that's all right. It's holding in there, isn't it? All right. That's tonight. We are live at 7 o'clock. I look forward to that. Any questions? Come and join me in the Wolf. Thank you very much. Bye-bye. Bye.
Yes, bye.